morning, everyone, and welcome to Monday live class. So let's get it. Today we have a special request from Littlefish. He asked us to take a look at a couple of assets, and the dynamic reactor is following a 9 EMA. That hasn't happened before. So this is something that you also see throughout your charts, guys. Depending on the time frame, the asset, you might be seeing the EMA following the dynamic reactor in certain ways, and that is because remember that an EMA it's an average, right? And that has a little bit more weight to say somehow at the end of the calculations, right? So the 9 EMA, for example, it counts the 9 last candles, regardless of your time frame, and it gives you an average plus, let's just say, plus a certain number, let's just say plus a 1 in the last 3 candles, in the last 4 candles, right? Just to add a little more weight into the most recent price action. That's why an EMA moves faster or reacts faster than a normal EMA, right? Just so you guys have something to watch, because sometimes that is just confusing, kind of like I have like a podcast like thing. So let me start sharing my screen really quick. There we go. So this has nothing to do with what we're going to be talking about, so you have something to watch in there in a minute. What's up? Good morning, all. Hey, hiya, Perry. What's up, brother? Welcome. So what happens usually when we have an EMA, it is that it it's not what happens. It's actually not what sometimes happens, what actually happens. You have an average depending on what EMA is. And remember, your dynamic reactor, it is a high volume zone. So usually you'll see that many people are going to be looking at a certain spot, right? And that certain spot is going to get you liquidity added to that. Therefore, your dynamic reactor will show you where people are setting up their their orders, right? Where the volume is allocated at per candle. And since a couple of people might be looking at one EMA or one MA or one specific support, you'll see that they both matched up together. But be careful, because they tend to depict within, depending if it's the daily, within a month. If it's the weekly, they really kind of go back and forth, back and forth. If it's in the lower time frames, like 5 minutes, they usually depict like between a week or so. So just keep your eye in there. Let me bring up my charting here on Bitcoin, and then after looking at Bitcoin, we'll go take a look at the special request. All right, and I want to get started with Bitcoin because we are supposed to be already into a long position. Remember, this long position needs to have a stop loss because we were expecting a pullback on the first area, and then a break of structure. That pullback did not play it out. Just like in here, we were waiting for that pullback. That pullback was almost to the T. It did not enter and then blew up. So just to compensate that, instead of making the entry on the pullback in here because we didn't know how far, well, then we went for the best case scenario for pullbacks, right? And then the break of structure. Remember that I told you guys the previous class that most likely end of Sunday we're going to be having a movement, and we did it. So basically, as you can see right here, it was on Sunday 13 at 10 a.m. my time. It was a little bit early in the morning, but there we go, break of structure at that point, and there we go. In fact, we already have it right here, BOS, break of structure, triple underline, right? And that's it. All right, at this point, remember, if you were in the morning market report, I mentioned that we should be taking some profits, at least enough to cover our stop loss. I also mentioned that I was about to not to move my stop to entry, and because of this secondary candle, look at that big body candle. That is basically a confirmation that we are coming back down. So why, despite I already have taken some profits, why do I want to get into an equilibrium when I can just move my stop to entry and call out today? So this is an example on how we change our mind with new information, right? So for the new members in specific, just remember that depending on how the market is moving, we need to adapt, All right. So not because we said, hey, breakout retest. Sorry, I did do. Oh my God, I'm just sneezing in here. Sorry about that. Uh, So not because we said, "Hey, breakout retest," that means that we're, regardless whatever happens in the market, we're gonna be waiting specifically for that retest, right? We need to change our mind with the new information that we have, right? Just like a scientific method, right? When you have more information and you have newer information, you factor that in. So be quick to change your mind, right? And be stubborn and changing your stop loss. All right. Other than that, we're having almost a confirmation. This candle has not yet finished. This should be ending up at 10, so less than 40 minutes to go. And in 40 minutes, I don't think that it's going to retrace that big of a deal. Nonetheless, I already have moved my stop to entry right at the end of the show. So that will be Dagat says, let me read you guys in here because I use exchanges, Coinbase, Kraken, BingX, and Bluffing. What do you want? See, what platform does everyone use for purchasing XRP? TradeStation, not work. I'm very new. Oh yeah, absolutely. Look at what Dagat is mentioning. A couple of things that you want to take into consideration. It is do not do depending on what you want to do with your XRP. If you want to buy and hold, and by the way, I'm not sure if right now should be a great area to enter XRP. All right. If you really like XRP for the long run, all right. And what does that mean for the long run? That you're willing to wait 4 years in losing, in quotations, quote unquote, losing money, while XRP is still below your entry point. Because right now you could be buying the top on XRP, right? Nobody knows. But right now, as we saw on the Piper Academy show, XRP and XLM, they are overbought, very, very overbought. In fact, XRP, 95% of the XRP emitted are on profits. Do you think that they're not thinking on taking some profits? So I mean, 95. Let me repeat that: 95 of XRP it's on profits. So be careful out there. Can it still jump up? Yes, and I think it's gonna do one last movement to the upside. But remember, we don't trade on hopes and dreams, right? We trade on breakouts and retests. So be careful in there. If you want to buy XRP for yourself, just because again you trust on the project and you think in the future it's gonna worth more than it does right now, which by the way I do. Try to open up a broker that doesn't require you KYC. That is just not to be giving your personal data anyone out there, right? No KYC, good, but also make sure that it's a reputable brand, right? Like Bluffing, back in the day, BitGate used to be no KYC, so on and so forth, right? You have a couple of options out there. And then move your XRP, if it's for the long run, move it to a cold wallet or a semi-cold wallet. The one that I use, which I still don't recommend, all right? So you need to do your own due diligence. It's Exodus. Exodus has been playing out fantastic for me, but that doesn't mean that it might be playing out fantastically for you. So you do need to do your research, right? If you're planning to trade XRP, which is buy it now to sell it in the short term for a profit, or to cut down your losses, right? Keep it on the exchange. In that way, you can easily move it back and forth, all right? Let me show you, just now that we were talking about XRP, let me show you something that it's important, and Piper brought it up today. What was it? I had it somewhere around here. XRP balance on exchange have surged to 3.949 billion tokens, guys. The highest level in over 4 months. This sharp uptick coincident with XRP's recent real rally from 216 to 283. Right now we barely hit the $3, right? Compared to June 23, right? So what means why do people send their XRP from their private wallets to their exchanges? Can anyone tell me why? Usually we see that exactly dump it. Yeah, exactly. So little fish. Yeah, to be sold. So that's why we got started. Now that I see XRP, I did want to just diverge a little bit because you also mentioned that you're new, right? So part of the community is to keep you safe. Do we know for a fact that XRP is gonna dump? Not really. For a fact, we don't know it. I mean, maybe a huge institution could be last minute jumping in and buying. That's what I mentioned. If you want to buy, right, you need to know first the risk. And then also remember that we give you the two possibilities. Either purchase it for the future, so you know that it could be going lower. In that case, you do not get XRP in futures, you get it on spot. All right. So you can hold it for, I don't know, in the worst case scenario for another cycle, right? Do I think it's going to go higher than $3 XRP? Why not? Let's just take a look at XRP. We're talking about it and we're showing other thing. Yes, I think that it's going to worth more in the future. In fact, I believe that we're going to have our last run somewhere around 315 or even 334 before we come back down. All right. But since 95% of the XRP is on profit, look at what happened last time we have the same amount in profit. What happened? It did a little bit of noise, right? And then boom, look at this movement here. Let me know, how would you feel if you bought in here and then you see your XRP in here? Would you be selling your XRP because what bank? What are we talking about with what bank? Can we get back at Bitcoin chart, please? Sure, after I finish this up, because we're trying to get a guy that is new saved. But yeah, absolutely. We'll go back to it, Keith, after I finish with this one. All right, so yeah, no banks calls XRP for now. All right, so how would you feel if you bought XRP here and then you see it right down here? No worries, man. So something important is that if you sold here and then it pumped back up, how would you also feel like that, right? Exactly, not good. We'll lose a lot of money, exactly. But the point is, you only lose money if you sell. That is thinking that you bought it on spot, all right? So what happens? You usually hold it, right? And then as you go up, you close a little bit of your position, right? And as it goes back down, you maybe re-enter for a little bit so you can lower your entry point. And then as it goes up, you get out of that coin. And then you rinse and repeat once you go back down. Now that's when you start re-entering with your XRP, right? And then if it goes a little lower, well then rinse and repeat until over time we get to the upside. All right, so just giving you the heads up in there. If you're gonna buy XRP right now where everything is dangerous, maybe you can have the chance to get it all the way to 335, but that is a risk that you need to evaluate if you want to take. All right, so just trying to save you, buddy, for maybe a to be a little scared right there in the market, so to get a little, get played out. But for the long run, I think XRP is gonna do better, right? For the long run, right? Not quite just yet, unless a groundbreaking news plays out. Our indicators tells us that, yeah, we still have room to grow. And if I bring up my predictive ranges, there we go. First predictive ranges, by the way, says that we're topping up. Second predictive ranges tells me that I have room to grow to 335, right? So again, be careful. I think we can still do half the way. That's why it plays out my alert right here. Sorry, come on, my trend line here, my support at 315, and why not? Let's add an alert. There we go. Most likely I will be looking for a short somewhere around here where everybody is going for that snowball effect. Let's go back to Bitcoin. And Bitcoin basically it's already been told, right? So we were into a long, we take some profits. Right now it's coming back down, move my stop to entry. Perfect. What is up next? Well then, let's zoom out for a little bit, because once we create, usually when we create, and let me turn everything off in here. There we go, much easier. Once we create or break through a purple line, we go hit the next blue line, right? At this point, we're rejecting. Usually that means we're going back for that blue line. That's why, because if I have this secondary candle, right, it will make sense for this thing to go back low in here almost to my entry point. So why should I be just not taking some profits, right? If it takes me out, that's fine. Something important that is playing out right now, it's a possible goose head. What happens when we have a goose head? Look at that. The head usually is the top. The peak usually is a little retracement and then further move to the upside. So the head usually is the top, right? The peak, which we're forming, is a little retracement, right? So that's where we start looking for a possible re-entry. So if I'm looking for a re-entry, why should I keep my entry open? Yep, there is a reason, because maybe we don't get back to my entry point, but that's why I'm partially taking some profits. And then secondary, moving my stop to entry. So if it hits me, I'm coming out with no loss and a possibility to come back in with a bigger amount in my wallet, if that makes sense. Same thing Bitcoin with XRP. It's not that everything is like on spot to be sold. It's not that everything is going to be exchanges, but right now we haven't had, let's go to daily or to a cleaner chart so we can see it. We were looking for an expansion, right, or retracement or flag out here at the top. We haven't had it, and this is important for a further continuation. We are breaking with decision the previous range. Remember, we've been talking about this range for a long time. And what happens when we have that breakout? We want to have that very dramatic breakout, right? That consistent breakout. That breakout, it tells you, hey, this breakout, let me get it a little bit cleaner. Right, this breakout, and let's do one more thing here. Lock it. Lock it. All right, perfect. And finally, I want also to lock this one. Let's clear this up. We want to have a breakout that tells you, hey, this is not an accident. All right. We want to have a breakout that tells you, hey, you know what? We are decisive on the movement. That doesn't mean only up, right? Yes, it's true that so far we just had one movement to the upside, second movement to the upside, but usually we go for breakout, retest with a lower high in here, right? With a support on previous areas of resistance. And do we have some resistances right there? Let me bring up my VPVR. Area for smart money entry right here. So we might be even going slightly lower before we do our dead cat bounce. Right, and that is what I'm expecting. Right there, after this breakout, because that breakout to the downside, it's unknown. This is the pattern that I'm looking for, all right? As you can see, it is a lower high. Let me just get rid of this, all right? It is a lower high and then some flagging section. Usually that flag out happens here at the bottom or in the middle of a fair value gap. On 4 hours, this is not a fair value gap, but on daily, this is a fair value gap. So at the center of that fair value gap, that is where we look for it. So our area of entry, it is right here to then take profits somewhere unknown up in here. How can we predict that unknown area? We have a previous weekly high. There we go. So that's where we're going to be aiming, all right? Right there. What else could we maybe using for support and resistances? Well, then look at this green zone right here as a resistance. It is outstanding out of the rest that they are bearish, all right? What else could we be looking into here? Look at, we have an order block as a maybe some support, right? So once again, looking for maybe an overshoot. So we need to be careful. What are we going to be looking for? Retracement. And then this is your reentry as long as you are on some sort of support. Right now, on the 4 hours, we have on Coinbase, we have a new set of predictive ranges. We broke the previous purple one. We failed to hit the blue one, but as you can see, we did try it. So we went to that blue line, right? Coming back down to where we usually go back to the gray one if we do not hold the golden lining here, right? And that usually, or that it is right now at our soft order block. So once again, it is coexistent with our previous analysis. So that is what is called confluence, right? We're looking for that confluence. Then if we take a look at our ranges, here we go. We have Mother's Milk right here at the same area that we're looking for a re-entry. And if we take a look at my falling knife strategy indicator, right, it is not only showing me the previous area right here, but it's also coexistent with the previous support zone. So everything is pointing that if we retrace, this is somewhere between 117 to 114 will be our next possible entry. Yeah, I still need to check sheets or tutorials. I'm not that smart. Nobody, you are smart. You just need to learn stuff. So do not underestimate your capabilities because, and let me tell you that, I mean, the first thing here is to build up on your confidence because the most important part of trading it is using the best indicators, and the best indicator above anyone or anything else, right, that being called chart prime, free indicators, trading view indicators, whatever, it's your brain. And I always stand behind it. Your brain is the most beautiful and accurate machine out there. You just need to teach it how to read the charts. So yes, I trust that you are intelligent. I trust that you're smart enough, and I trust that you are doing things right, especially because you already have taken the first step, what most intelligent people do, which is going for education. So welcome to the class, and yeah, trust yourself because I trust you. All right. What else do we have? Let's go. Let me just bring a couple of things up in here in 1 second. And he says, let's take a look at a little fish request. He mentioned we should be taking a look at GUSDT. Let's take a look at the Binance. I think that's the one that we're going to be looking into. And what time frame did you mention, my friend? That is following up the 9 EMA. And in the meantime, let's add 4 EMAs. That's the one I like. I look at it 3 and 50 minutes. Oh, yeah, love it. Perfect. So right here, you'll see, let me just turn this off so we can have enough space. We have a 4 EMA. That will give me, let's do here, the first one is going to be the 9th. The second one's going to be the 55. I like the 55. And then let's turn the other ones off. So this one's off. EMA, let's push it all the way here, 9. And then this one, let's make it orange and also push it and make it thicker. Let's click OK. Ooh, thank you. Thank you. Uh, got it. No sound. Thank you guys. Absolutely. So I was mentioning that you look at the 15 minutes, and I set up the 9 and the 55. And I'm gonna be looking into the 4 hours. I know I'm not in the correct time frame, but that is to analyze the pattern before we get into a possible, what is it, biased thing, right? So thank you guys for letting me know that we didn't had sound. It's just that I'm a little sick, so when I cough or sneeze, I tend to mute it so you don't have to hear it. So let's go back. All right, so talking about the EMA. The EMA is an average, right? And having your dynamic reactor, right, shows you a way, and then it looks like the 55 kind of like a follows your dynamic reactor, right? And then what happens there? Well, then it start crossing it. So usually you can use one of those for confirmation, depending on what you're looking at. I usually just leave it as my dynamic reactor. But then the previous EMA that I usually liked a lot, it was the 55 on the 4 hour. Nonetheless, how does the EMA works? The 55 EMA takes 55 bars and gives you the closing price, and you can see it here. If you go to input, or what is it? Input. Where can you change that? It used to be somewhere around here, right? I suppose default. If you just do EMA, maybe just the exponential. Where's the console one? Or maybe just EMA. No, come on. Where is it? Here, let's just use that one, for example. If you take a look at your exponential moving average, you'll see, oh yes, again at default. Well, I wanted to show you, here it is, all right, inputs, 9, and then close. What is it close? Because close, it talks about the price at what each candle closed, all right? But you can change it to its open price, its highest price per candle, or its lowest price per candle, right? Just want to show you that because they don't longer show it here in EMA. They just show you the default precision, and which I don't like. I rather see it, open, close, and stuff. But it usually, I mean, at default, it gives you the close price of each candle, right? Closing price. In fact, this was a green candle, so closing price, 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 so on, so on, so forth, right? It adds all of those closing prices and equals X, all right? And then that X, right, all of your closing prices on all of those candles, they multiply that X times the fewer ones, right? Let's just call it, just for this example, the 10 last candles plus 3, right? It's just an example. So what happens there is that the last 10 candles, they're going to have, instead of the closing price, they're going to have the closing price plus a number 3. So if they close at 0.01, they're going to be closing at 0.0136, if that makes sense. So we're adding a value of 3 at the end, right? That makes the last 10 candles to have more weight on where is this trend line, if you want to say it like that, be plotting. Just so you know how that EMA works, all right? So just saying. All right. Now that we see how the 9 EMA, it's on right now on the price, right? In the 55, it is acting as support, and dynamic reactors all the way back down here. Look at how they shift as we go lower in time frames, all right? Based on our drawings. look at the 55, it's getting closer, right? Remember, this was the 55. You see that? And the 55, right, on a lower time frame, on half of the time frame gets closer. So if I, for example, if I had, and that's why I brought up the EMAs, if I had, since I can see, I cut my time frame in half, right? And if I double my EMA in half, I mean twice, I will have, let me show you, there we go. Let's use this EMA. This is gonna be, instead of the 55, 55 plus 55, 110, right? And then let's do this style. Let's change it to a bright red. Let's make it very thick. And there we go. Now you'll see that just like in math, right? If you divide something in two, so we divided a time frame in two, the EMA also divided in two. Because yes, we're using the same amount of candles. Well, the 55 EMA was using what? 55 candles, right? You see this. But in a lower time frame, we're dividing, or we're multiplying those candles by twice, because we're having 2 candles per 1 candle before. Does that make sense? So 4 hours equals 1 candle back in the previous chart, and now 2 candles per 4 hour, or 1 candle per 2 hour, if that makes sense, right? So what I'm trying to show you here, it is that you will always be able to track the volume based on a mathematical equation, because your air average gives you a volume-like reaction. They're not always peg, and I'll show you that in a second. But we're discovering, right, how that volume reacts on what people are looking at, right? The zone where they're looking at and pointing their stuff at. Because if you trade usually lower time frames, you most likely are doing the 100 EMA, the 200 EMA, right? Which give you a little bit more space for long and short entries for swing trade on lower time frames. So, so far, is it too complicated, or are we on track on what's going on in here? All right, in the meantime, let's just cut to the chess. Let's go to 3 minutes in here, right? And let me just clear this up. Remove, what is it, 16 drawings, perfect. And we have our dynamic reactor ready to be plotted. And here we go. It seems like, there we go. In this case, remember how first on the 4 hours, none of them were pairing, right? In the 2 hours, well, then they were pairing with the 100 EMA, right? And right now in the 3 minutes, they're pairing, or we are pairing our dynamic reactor with the 9 EMA. So, thank you, honey. So, other than that, this is something that doesn't always happen, but what it means is that your main volume, it's being right at that EMA. It will depend. Let me see. It will depend depending on how long you look back, right? Remember that we're on the 3 minutes. So usually if we're looking at 3 minutes, maybe between a week on a second week, you'll see a depegging action. And that will depend on the breakout of that range. Nonetheless, if you're seeing this, for example, your dynamic reactor following one of your EMAs, the way to give you a support and resistance will be either changing your time frame for a higher or lower time frame, or that's why we have the quantum reactor. So I already have my quantum reactor in here. So you turn on your quantum reactor, and your quantum reactor is designed to cut through lower time frames noise that sometimes they get pegged to the dynamic reactor, if that makes sense. Jerry, my pleasure, my pleasure. All right, so yeah, I mean, this is very, very fantastic and good catch right there, little fish. It also caught me by surprise. Once I was looking at what was it? The daily. and it started pegging to the, what was it, the 22 EMA or something like that. And I was like, what? And then I went to the devs and they told me, yeah, because I mean, you just happen to find a volume zone that matches with your average, because at the end of it all, you're averaging the volume of each candle, right? So eventually, you're gonna have it pegged on one time frame with one kind of like EMA or MA. So yeah, it's doing fantastic. So the way to counteract this, if this is just too close for you, you can add your EMAs, right? And then use either a bigger EMA, that's why I put down the 55 and then 110, and or if you like it to the easy solution, just go for your quantum reactor. So your quantum reactor is going to be way much more smoother, but it will indicate you once we are breaking through with the gray zones, right? And then when we're maximizing with the red and green, right? Maximizing, right? Maximizing. And then you can start looking for those retracements to pullback, right? Retracement to pullbacks, so on and so forth, right? But yeah, that is basically how to use the indicators. That's why we brought up the quantum reactor, because quantum reactor grabs the volume and grabs the trend that you already have and tries to upgrade your dynamic reactor, making it less sticky in lower time frames, right? And more trendy-like in the lower time frames, just to avoid this, like, because I mean, at the end of it all, the 9 EMA and your dynamic reactor at this point, they're just so entangled with your price action that they hardly tell you where we're going to be bouncing. They're just giving you the actual price action in real time, right? Where is the quantum reactor located? Your quantum reactor is under your Market Oracle Pro Plus. In here, you go to the settings. Let me go here to your settings. And then right here below your dynamic reactor, you will have your quantum reactor. Also, your quantum reactor, and this is very important because remember, we're trying to make this quantum reactor much more active, right? So for example, let me show you. And by the way, you'll see that I have version 1.4 and 1.2. What happens on these versions is that we slightly change a couple of things, but don't worry, the same ballpark, the same options are right there. Usually, what we improve it is on loading times or mathematical precision. I do advise you to always have the latest version. Nonetheless, having just a little bit of offset like I do here, no big deal, right? No biggie. So if you do your quantum reactor, let me show you this real time, right? Let me, just for this example, get rid of my 4 EMA, right? And then also right here. So right now we have, and let's do one more in here. Let me right click and how do I hide this? Hide, perfect. At this point, we're hiding the price action, just so we can see the difference in here, right? The dynamic reactor, it's giving you the price action, right? And your quantum reactor might have too much air. You can use your quantum reactor in 2 ways. You can use it in lower time frame, which is my favorite way to use it, which is not, I would say maybe it's not it's a little bit counterintuitive, right? But when you have your gray zone, you're breaking through. You're in the process. When you have your first red, you're usually maxing out or very close to max out, right? So once again, look at this green, very close to max out on your price action, right? Now, usually I use it as a reversal signal. Or, like for example, right here, we're purple. We're quite out there max out. This was our first max out, and then we bumped, right? Did not play it out exactly as this one, right? And increase of that negative volume, right? So in this case, we can do something a little bit more interesting. For example, we can go here, check our quantum reactor. Instead, I like it on slow, but you can put it on fast. It will auto make it more sticky to your price action. Give it some time while these eyes stop moving. There we go. Use it. It is more jaggly, right? Just so you know, I like it always, always, always on slow because it gives me a smooth factoring here. But what I do change is my chart. Chart means whatever your current time frame is. If I'm in chart and I go to the 30 minutes, it's gonna be giving me the quantum reactor of chart, which would be right now in 3 minutes, but if I go to 30, it will give it to me on the 30. So it will be different from the 30 minutes to the 3 minutes, if that makes sense, all right? And here's where the trick lies. Let's go back to the 3 minutes in here, right? We already know that this is our price action because it's very sticky, and we know that this is very maybe far off, right? What I can use, or what I can do, is use an intermediate EMA, like for example, the 55 EMA, the 100 EMA that give me center between the quantum band and this one and this other one, and then change my quantum reactor. Quantum reactor on slow, always on slow, and give it to me in the 1 minute. Let's just wait for that little eye to stop moving. Just a little bit of a piece of advice. You can do this 2 ways. Look at that. Now you have a much more sticky quantum reactor. You see that? Instead of adding my 55 EMA, I basically created a working dynamic reactor out of my quantum reactor that actually follows, look at that, breakthrough on the gray, perfect, right? And then bounce off, right? Breakthrough, bounce, this one was a little bit of a trick, lower, high. We create a pattern here, breakout retest. Oh, now we're going down. Bounce back down, and what I'm gonna be expecting will be another bounce back down, or bounce back down, not lose the support, and then breakout retest, off you go. Just like it happened, where is it, right here? Bounce, did not back down, breakout retest, off we go, right? So this way, you're combining or you're using your quantum reactor in a way that gives you a mathematical accurate fraction of your volume zone, if that makes sense. I don't have quantum reactor on my Market Oracle Pro because you are on the Pro. You need to have the Plus, and you should have the Plus. Yes, because you have the 326 because you're using the Pro. Oh no, your Market Dynamics. If you have the 326. Let me see. Market Oracle, yeah, 326, this is the one that you have. Sherry, take a look at here. This one says, this one right here is the one that you have, 326, all right? But look at its name. It is Market Oracle Pro, all right? The one that we're talking about, it says Market Oracle Pro Plus. You are a Plus subscriber. The way to add it, you just go to your indicators at the top. Yeah, at the top in here. To your left, you should be seeing a invite only scripts. Click it. You're going to have a bunch of indicators, right? Don't get overwhelmed. Just scroll down and look for Market Oracle Plus. The plus is the one, right? And since you're a Plus subscriber, that also gives you access to our beta or beta testers, right? So you may have more than one Plus, all right? For example, look at this, Market Oracle Plus and Market Oracle Plus. Don't worry, stringing branch, right? So that is your tester. But don't get confused. Just use the Oracle Plus with the highest count. Again, look at that your Pro has the highest count, but you're not looking for your Pro, you're looking for your Plus. All right? Can you send me a picture as your invite only? Marker, there you go. I'm looking at it right now. You have a star on the Market Oracle Pro, and right above it, it says 1.4, just like mine. You have Market Oracle Pro, just like mine. Right above it, you have the 1.4. It's right there. In fact, yours looks exactly just like mine. Don't worry. It happens. It happens. Too many indicators. That's what I say. Don't get overwhelmed because it's like looking at like Excel sheets, right? There's too many numbers, too many words that you get lost. Don't worry. It happens to all of us. So you are not blind. You just didn't see it at the first glance. So that's why we're here. So don't worry about it. But by the way, great catch. You are fast because you requested, you send a picture of what you're seeing. That really helps us to investigate and help you real time. So shout out to you, my friend Sherry. Shout out. All right, so you have your plus. Quick reminder: you can turn it on and off, right? But remember to reconfigure. Just so you know, your trendy, if you have it clicked, is the trendy is the same as your trend mode. Single mode trend is the same as trendy. And your turning, remember that you need to configure that based on what you're seeing. Really quick on how you configure it, it is that first of all, step number one, it's find your best time frame. What is your best time frame? That depends on you. I cannot tell you which one is it, but I can give you a couple of advices. For example, if you work, right, you need to concentrate first on the golden egg chicken, right? Why? Because your work might be giving you the money that you need to survive and to pay for your education. So, having said that, right, thinking that you're not retired, well, how or when can you trade that is not going to be affecting your work? Remember, never ever trade while you work. You can be looking at videos, you can be learning, you can be looking at the charts, right? You can be doing analysis while you work, but my fair recommendation, it is to not trade while you are working, because trading is a highly addictive, rushing emotion, right? It gives you so much emotion that takes your brain out of your work, right? Out of your job, and it puts it into trading. So be careful out there, right? I do advise that if you're working, if you're making your job, if you are at your job, do analysis, do education, do videos, do reading, but not active trading, right? Let's just say that if you're already retired, you have the whole day to trade. Perfect. If you have the whole day to trade, how fast can you trade? Or better yet, where do you understand what's going on? That's what I mentioned. Your brain is the number one indicator, right? Let's go. Let me just turn this on, the price action. Let me turn all of my indicators off, right? And I'm not used to GUSDT. So I'm going to be using that as an example, right? So for example, right here, what I'm going to be trying to do, it is going for trends, not trades. All right. So I'm looking for trending, not trading, if that makes sense. What is a trend? A trend is as you go as far back as you can. All right. And then you look for uptrend, right? Or maybe let's go back in here. There we go. Or downtrend. You see that? Then you have sideways trend or slightly downtrends ranging, right? But for me, for example, this one is hard to, I mean, come on. Really? I doesn't really got it. So I'm a little confused. Is this downtrending or is this sideways trending, right? If that happens to you, don't worry. Don't waste your time in here. Your brain is not used to this kind of information. Let's feed your brain with information that can process. There's nothing wrong with your brain. It's just something wrong with your time frame, right? Because your brain has already a couple of years of experience, right? At least 18 years of experience, at least. So let's go to the 12 minutes. So as you can see, I'm going higher, right? Click away. And now I can perceive a little bit better. Look at that. I can see a downtrend. I can see a range. I can see an uptrend. I can see a downtrend. I can see a range. I can see a downtrend. So from the 3 minutes to the 12 minutes, my brain can easily understand much better a trend, right? And Perfect. So I think 12 minutes is doing great. So the next thing that I can maybe do, it is, all right, how much time do I have to trade? If you have a work, if you have a job, well, then ask yourself, you can tell yourself first, I cannot trade while working. So when am I going to be trading? Early in the morning, which I can maybe wake up much earlier to do my analysis before market opens, as we have support and resistances, predicting how things are going to go, and having enough time to trade before I go to work. 12 minutes might not be the answer for you then, right? Might not, right? And then, or you can let pass all the day, and then after you have watched the charts throughout the day, not trading, watching, right? Maybe you can get to your, at the end of the day, and before going to bed, you can maybe do some trading. Then the 12 minutes might be for you, right? For my particular skills or how my brain works, before I went fully on crypto, I was an architect. Well, I'm still an architect, right? But I still had a day job. And I needed to concentrate on making plans, projects, designs, rendering, so on and so forth. So I rather go to the other route, which is how much time do I have? I actually don't want to wake up that early because I usually went very late to bed. So I rather have multiple days to trade it. So I can analyze a little bit in the morning before I go to work, then analyze a little bit at the end of the day when I come back to work, and then have enough time to prepare and then take the trade as it comes to me. The answer for myself, my specific scenario, was the 4 hours, because usually the 4 hours give you a 7 days trade, right? And usually in the 4 hours, I can identify uptrend, downtrend, ranging, downtrend, ranging, uptrend, uptrend, downtrend. I can do it easily, right? My brain perceives this easily. So again, feed your brain with something that can easily digest, all right? And so right now I can tell you right away, right, very quickly, that we are ranging slightly downwards, but we are ranging. If I can see ranging, or I can see trends, I can do trend lines. And as you can see right now, we are not using any indicators. Remember, the only indicator that we're using at this point is your brain. That's why you want to feed information that can read easily and fast. This way, you can already do 90% of your analysis with just your eyes, right? So what is my analysis? Hey, we are ranging overall, but we have a downtrend, and this is where I look for my trades, right? What is my trade? I look at my downtrend. My trend, it's over when the trend is broken, the trend line is broken. So here is broken, not in here, in here. And I look for breakout retest. There we go. Retest at previous. Look at that support, support, resistance, resistance. I can do a trend line. This is my trend line, my first entry, my second entry, and then off I go, right? Then if I can do this easily and I add my indicators on top of this, this is like magic, like seeing through dark. Easy peasy. Look at my dynamic reactor. Look at where did it give me an entry, right? What did it give me confirmation? Perfect, right? So now seeing colors and have that automated do it for me in something that my brain can easily digest. This is just like turbo, right? Then I do my support and resistance. Look at that, right to the resistance, back to right to my support, right? So as you can see, your first step configuration, it actually makes 90% of what you're seeing. So right now I can just do these two indicators and tell you, hey, you know what is my entry? Well, I have a breakout, retest right here. I still have a little bit way to go. I'm still bullish right here, right? And I'm missing one of the most important indicators, which is your oscillator. Oscillator usually give you information that you cannot abstract, all right? I also see, because remember, this is the trend, this is the time frame that my brain can easily understand. So right away I can tell you that we have a trend line here, right? What is the support of my trend line? Ding, ding, ding. What is gonna be my re-entry? Ding, ding, ding. What could be the fail point? Making a range and then going back up. So for that, that's when I use my oscillator, either my plus oscillator with a little plus signal, which you also have, or my regular, oh, not this one, sorry, or my regular oscillator right here. So far, this is telling me, hey, should I be longing right now? No. Why not? Because I don't have a support. Well, I might have a support right there, but look at that. I'm almost bouncing or going through, so I need to give it one more candle to see. If I break through, I'm going to be waiting for my price action to get to some support. And when I'm not support, I want to see the flip of the ribbon. Just like in here, look at that. Flip of the ribbon at support, boom. Right? Support, flip of the ribbon, boom. Right? So once again, what am I looking for? Support, flip of the ribbon, and in a time frame that my brain can easily perceive, right? So the time is already out. Nonetheless, I think this was a very interesting class. We went over Bitcoin, XRP, and also the basics on how to use the indicators. We also learned a little bit how things are getting paired, how to counteract the stickiness of the dynamic reactor, right, in some lower time frames, and so on and so forth. So, my pleasure. So guys, hopefully you guys are taking notes. Remember that we have the class recordings, and I'm gonna be uploading this class as soon as possible. Usually takes me around 2 hours just to edit, cut, upload, and that's it. All right. So also, guys, always ask away. That's what we're here for. If you're trading out there and you feel confused or you don't understand stuff, put them into a note. All right. Open up your computer. You're in search notes or sticky something, right? Something that you can write on your computer. Write the situation. Write what you're not understanding, or write what you would like to learn. Right? And then when you came back to the class, you just copy that question, paste it in here. That way you can ask questions fast, right? And we can have enough time to explain it live in the class and give you, as the market moves, examples, right? So as you can see right here, it's not I'm giving you examples in the past, right? I'm giving you an actual prediction on how my analysis is based on what we learned in the previous 30 minutes, right? So we can learn new stuff and do right away a prediction to see how that is used in the market. All right. So guys, thank you so much for your patience. Thank you so much for staying in here. And other than that, guys, see you as always tomorrow. See you guys.